The insurance needs analysis. By the end of this lesson, you should be able to explain the disability income replacement ratio, discuss some of the factors that need to be considered when analyzing the disability income need, and share some useful tips for purchasing disability insurance. So, in the process of planning for disability, some of the basics will always be the same, such as knowing your client, what their risk exposures are, goals, priorities, income needs, cash flow if they were to be disabled, and other considerations such as a dual income earner family or a one income family. Then proceed with reviewing the current risk management plan, disability benefits that may be provided by their employer or individual coverages, and also social insurance programs such as Social Security disability. Next, assessing the client's availability to fund the premiums, and then follow up with integrated planning solutions. So the amount of individual disability insurance you should buy depends on a few different factors. First is how much money do you need if you're disabled? Certain expenses go away when you're disabled. Commuting expenses, dry cleaning if you do that for your current work wardrobe, lunches, eating out, things like that go away. So that is mitigated. So that's the first thing to look at. Second is any source of disability income that you'll receive from a group policy or the government. And last is how much insurance you'll be able to purchase under the insurance company's guidelines. To that last point, you can't just go out and buy a massive disability policy if your income is not sufficient to justify it. So there's underwriting criteria and guidelines that come into play. So regarding disability insurance, whatever the source, it will not replace all of your income. At a maximum, you're looking about 2/3 or so. Here's the other thing on that. The benefit typically is tax-free. So while you're working, not disabled, you have your full salary minus taxes to get to the leftovers, so to speak. If you're disabled and you're receiving a tax-free benefit, well, taxes don't come into play, so you don't need the true 100% replacement ratio. And usually recommended is in the 60 to 70% range, again, roughly 2/3 of your income. If you're in a higher tax bracket, then you need less money because, again, the leverage effect. So we've already mentioned due to a reduction in income taxes and decreasing in commuting and other work-related costs, that's another factor that mitigates what you're going to need. But on the other hand, certain expenses might increase, such as medical, rehab, transportation expenses to get to and from rehab may require to bump up the ratio slightly. Some other factors to consider when determining how much disability insurance to purchase is, are workers' compensation benefits available if you're injured on the job? Does your employer provide short-term sick leave, either sick days or a short-term disability policy? And if you're a union member, you might be able to collect on group union disability coverage. Some other factors to consider is if there are other benefits available under government programs, veterans, civil service, black lung, and Medicaid also for low-income people. Other insurance, if your disability resulted from a car accident, do you have coverage on your policy, or could you collect from the responsible party's policy? And next is Social Security benefits. Typically, you have to be severely disabled in order to qualify for Social Security. And how much you receive depends on salary and number of years covered. You must be disabled for at least 5 months and expect to be disabled for a year. And the Social Security Administration typically takes about 3 months or more to process a claim. You must not be able to perform any job whatsoever. It's a very stringent requirement. And it will be integrated, meaning that the amount you receive from Social Security is going to be reduced by other payments you get from other government disability programs. All of these sources combined cannot exceed 80% of your average earnings before you became disabled. So again, there's limitation factors there. And on Social Security, you must pay federal tax on your disability benefits if your income exceeds a certain limit. What is that limit? best to contact the CPA to find out current, because often those are indexed to an annual level. Some tips for buying disability insurance. One is to build an emergency fund to save a few months' salary to help carry you over in case of an emergency such as disability. This can help bridge the gap of a long-term disability elimination period of 3, 6, 9, or 12 months. Be aware of the type of coverage that you already have, and look at the definition of disability in the policy. If you can, purchase an insurance policy with very broad coverage of disability instead of one that narrowly defines disability. The broad coverage would be if you can't perform just your own occupation. A limiting factor would be if you cannot perform any occupation. So for example, a doctor has a bad accident and he can no longer be a surgeon. Well, that's his own occupation, but he might be able to teach at a university. So he's not operating on patients, but he's sharing his knowledge and he can get a good job doing that. Well, again, that would be a difference between your own occupation or an any occupation. Under an any occupation policy, in that example, the doctor would not be able to collect disability because there is something else he could do for gainful employment. And last point, avoid double coverage. Typically, you cannot stack on top of each other a bunch of disability policies. Examine the verbiage in the contract. Typically, there's a non-stacking provision, and what the result would be is the benefit would be paid out pro rata between the policies that were in force. And also think about insurance benefits when you consider a job change. Get a policy that is guaranteed non-cancelable and renewable, meaning that as long as you pay the premium, the policy will stay in force. Do an annual review. Review your insurance coverage yearly to be sure it covers your family's current needs. And, of course, comparison shopping. And that's not just limited to price, but also in the strength of the insurer. If an insurer has had poor loss experience or has poor results in their investment portfolio, you want to be with a company that's going to be around to keep their promise when you need them. I have a calculation worksheet here where you can calculate the monthly expenses and income sources if you were disabled to figure out the monthly amount needed. To sum up, we've reviewed the disability insurance replacement ratio. We've analyzed some of the factors that need to be considered when analyzing the disability income need, and gone over some tips for purchasing disability insurance. Thank you much for your time.